Okay, hello there, traders. Thanks for joining us for episode 14 of the TOGS Trading Podcast, the trade podcast where myself, Paul, and my good friend Ian talk about our trading experiences through the prism of certain sort of, let's say, trading topics. Thanks to all of you who have joined, you've subscribed. Okay, thanks to all of you. Give us a like, give us a comments. We love them all and stuff. By all means, please keep that going. If you've got topics that you want us to talk about, we're very happy to. But last week, those of you who joined us last week, we talked about basically dealing with how to deal with a trading slump, right? And we had lots to offer on that. And this week, we're doing the opposite, okay? How to deal with when you're experiencing trading euphoria, where you think you can't put a foot wrong, and what does it actually generally lead to? So, as always, it's me and Ian here. So, looking good. Billy Ray, how are you doing?
Thank you very much. Okay, I drove down from Dublin, which is a 3.5 hour journey down here, 4 hours really with a stop. So I'm a bit wonky, I think, but I put loads of espressos in a cup, so I'd be fine.
Right. Well, there you go. That's what, as you say, it's about 3.5, 4 hours to drive from Dublin to Mayo and stuff and what have you. So that's a nice way to spend your Wednesday morning, especially when actually the
Well,
markets were good.
I suppose it is, but the reason I came down is that I'm having a new roof, or the roof has been extensively fixed. So I have builders, roofers climbing all over the place. And by the way, if the screen goes blank, they've done something with the electricity or something like that. So I just basically came down to keep an eye on them. And it turned out that I didn't know it, but turns out the roofer was in the same class as me in school.
Oh, there you
So it's
go.
interesting to see.
Lifestyles famous there, Ian, and stuff.
Yes, yeah. So
How good it will.
consequently, I'm in the least picturesque room in the house, the office downstairs, because it's the furthest away from the roof, basically.
Fair
Yeah.
enough. Well, these things got to be done, haven't they?
Mm.
And it's no small undertaking or no cheap undertaking to get your
No,
to get
no. It's going to cost a
your
small. It's going to cost a small fortune, really. Well, 12,000 if you want to call that a small fortune.
It's all relative, isn't it? So it's
Mm.
all relative stuff. So
Yeah.
that's how many full ES contracts is that? How many S&P contracts is that? That's stuff to.
Well, it's only 1 point if you have enough contracts on
Well, yeah, that's it.
and a
Well,
nice tax regime.
yeah, that's the truth of it. That's the truth of it and stuff. So just before we kick in, so yesterday, Ian and I, we had a little bit of an attempt at just like watching an hour on basically on the ES, okay, on a Tuesday afternoon and what have you, and just talking through it. And maybe it's something that we might add like an additional session. It's just, and it was just us looking through, charts. But in this case, it was Ian's charts, just looking through what was going on. And to be honest, it was dull as ditch water, really, in terms because there wasn't much going
Mm.
on. Everybody's waiting for the news and for Powell to speak and stuff. But it was all right. And as I said, if you listen to this and you'd like to hear more of that, well, then drop us a note and stuff, and we'll see about it. But it wasn't the most exciting cash session early doors, was it?
No, it wasn't. But in saying that, it wasn't a bad range either. When I was looking back on it over yesterday, when I finished up, because it went down. There was a previous high, and it went to the previous high, and it came back up to resistance, and it went down to the previous high, came back up to resistance, and did exactly the same thing today. And I mean, it's just range trading. It's not a huge range, but it's a very regular range. So they can be really quite nice. Like I mean, those small little ranges, if they're regular, it's not as easy to trade as the trending market, but it's not hell either. Like it's not chop
Okay.
because the ranges were like 20 points wide or so, and that's loads. 20-point range is fine.
I think
I think
I think what we were looking at yesterday was it like a 40-point range? And as you say,
something.
20 points, anything over 20 points is tradable, really quite
Yeah,
tradable, isn't it? Stuff,
it is. Yeah,
especially.
yeah, because you're going to get soaked up. You're going to have points on both sides soaked up by waiting for an entry, by you're waiting for certain things to happen. You want trend line break, and you want you want your 5 minute bar to close perhaps, or whatever it is, or maybe you're waiting for an indicator confirmation. So you're going to lose points on either side. It's the bit in the middle between the two because even when it goes to the other side, you have to wait again. You have to do exactly the same process. You have to wait for a trend line to break, or you have to wait for them to signal you to get out.
Totally.
So you lose points. You lose part of that. So if you had a 20-point range, you're going to lose. You'd be lucky to get 10, basically. In my opinion, you'd be lucky to get 10 really out of that. But that's still 10 points, and 10 points is
Yeah,
10
that's
points is a day's wages, for anyone.
yeah, that's very doable. That's very doable and stuff. So yeah, as I said, if you're interested in seeing more of that, let us know. Okay, drop us a note and what have you, and we'll take it on board and see if there's as we say with all these things, we're both traders, all right. It's all about supply and demand, all right. If there's demand for it, we'll supply it. If there isn't, we won't. Simple as that. Nice and simple. But anyway, today's session, Ian, as we said last week, we talked about how to deal with a trading slump. This week it is about dealing with trading euphoria. So, what have been your own experiences of experiencing euphoria in trading, and B, where has it led you, and C, how have you dealt with it?
Well, the first thing I always thought about euphoria in trading is it's a two-sided coin. So if you have those big highs, you're going to have big lows. So you're going to get, and in fact, in reality, you're going to get more lows than you're going to get highs. So one of the things that you really have to work on is just having this sort of emotional regulation in yourself, because it's very easy, because there's a period of time, especially in the middle. So you start off with trading, and we say the first 6 months or something like that, if you survive it, can be quite euphoric, because you're learning these like big lessons, about technical analysis or psychology, or you're learning whatever you're learning. And then you have these like very euphoric moments where you have these big moments of understanding. And then you take these span-you moments of understanding and you apply it to the market. And then the market says no. And then because you had this euphoric thing and you thought your life had changed, then you have this big downside to the other side of it. And that's the main danger. I think in ongoing danger with euphoria is that it's not the big highs as such, it's the big lows that come after it. So learning to be emotionally stable is key. And if you survive long enough, it just basically you have a return that you can expect every day, that you can kind of, you have within roughly, you have an idea what you're going to get. And then, you occasionally get double or triple or whatever your normal return. And, you're happy, but you're not euphoric, because it's not life changing. Your life isn't changing. It's just you had a good day. So you're very happy, but you're not euphoric over what's happened during the day, basically, I think.
Yeah, I think that's a good point as well. Okay, I suppose part of it is about how do you define euphoria in trading, and you're right. When you're at the start of your journey, and actually, you can have it at all points of your journey. You will have. I would probably call it a light bulb moment, as in something clicks. All right, something clicks. Okay, you've been working at something, or you've been studying something, and finally it clicks. Finally, it just basically understands. Finally, this is probably inappropriate, but the market raises its petticoat, and you are seeing a shining example, okay, of what the future may hold, like a teenage boy. But there's no need for that, Paul. But basically, what we're looking at is a case of there is that just it is like bang, the world looks different. All right, the world looks different. And I can remember years and years and years ago where just like simply, it was just like simply understanding the power of like a simple 1, 2, 3 pattern. It's just like ta-da. It was just like literally bang, and it's that case of once it clicks, you see it everywhere. Okay, you see it, it's that thing. Once you learn to see it, you can never unsee it. It's there and stuff. So I suppose, in a way, that is a euphoric moment. All right, that is a euphoric moment. And usually, you think, here we go, I've cracked this. Okay, here we go. Step aside, Paul Tudor Jones. There's a new boy in town. Here we go. Saddle up, and invariably you make progress, but perhaps maybe not as alarmingly as fast or as steep as you're hoping. So that's definitely one point and stuff. Definitely that. And another one I'm kind of pitching is like, what, if any, experiences have you had where, you have been trading well, all right, and you start to believe your own myth and you start to sort of, you start thinking ahead of yourself, okay, in terms of everything that's available. What, if any, experience have you had of that in your own
Well,
trading?
I was just thinking about one incident. I was here as a restaurant and going for dinner and tonight actually, and I had just before I walked in the door, something clicked in my head about trading. And I had this like real big moment of euphoria. And I remember there trying to sit and order my food and tell the waitress.
Oh, yeah,
And I just had this really euphoric moment, I had this eureka moment and trying to explain
that's
to
right, sir.
some 21-year-old girl was going, do you want fries with that?
Yeah.
But, yeah.
That's right,
So
sir.
anyway,
I don't want a monetary tip. Just give me some piece of arcane, obscure trading insights. There, that will cover me instead of a healthy €20 tip.
It's also one of the ways as well that subconscious works is that, as you were just saying there, is that once you see something like that, your subconscious changes completely. It's
Yeah,
one of the few ways it can change. And then once your subconscious changes, then you're a different person because that's making 90% of your decisions. And that's the driver of the whole lot of it. Um, I suppose on the other side of it, I think my worst moment that I can remember in trading, which is a long time ago now, it was started in January. You start off in January with this really big new goals, new this, new that. And I had a really good January and I worked really hard and I did whatever. And it is true, you start getting into your little groove and you start really believing that you've cracked the whole thing and you're really happy. And it's all, the weight is taken off your shoulders because it's quite stressful, at that period. And then in 3 days of February, the first 3 days of February, the first three trading days, I just gave it all back plus more that I had made in the month beforehand. And the Friday came of that week, and about 4 o'clock in the afternoon, I just went to bed, pulled the sheets over myself, and went, I don't want anyone to see me all dinner. And that's the other crash side, and that's what I mean about the crashing from euphoria is that it's you have that euphoric moment, and then you have that crash. And the problem that comes after euphoria is confidence, and the confidence that you get comes in the confidence in you, not in your setup. And that's I can do this. I'm a master of the universe. I'm great. But what you're not doing is you're not necessarily having renewed confidence in your setup. You're not sitting there and saying, "Oh, I traded this double bottom perfectly." You're going, "I traded this perfectly." This
yeah,
double, you're not looking at your setup. Your confidence comes in you, and a lot of it is as well as I think is that people. It's not euphoria about what they're actually doing. Really, it's about the change of their relative status. So to give you an example, right, you go on a diet, you go to the gym for a while and you start putting on a bit of muscle and people say you look better. But what they're really saying is that you look better. If you think about that statement, is that that's a change in your relative status to society. And people enter trading to change their status in society a lot of the time, especially men enter trading to, try to make the money, try to make the lifestyle, whatever. And that's what you're really actually euphoric about. I mean, it's trading is a tool for a change of your life, for your social mobility, and that's what you're really being euphoric about is that, which I just think is a thing to know, and it's one of the big reasons as well why you get a lot of people leaving trading quite early on because they're going into it not for trading itself. They're going into it for two reasons. One is to create euphoria for themselves, and the second is to create the status change for themselves. And that's one of the big reasons why I think that people, because I've had mentorees over time, they go in and they're in the early stages and they're learning loads and they're very euphoric. And then you hit that wall where you have a lot of knowledge, or enough knowledge, but you don't have the skill to use that knowledge particularly well. And then the euphoria wears off, and then they go and do something else because they're also chasing that euphoric high. And then you find you meet them in 6 months later or a year later or something, and they've tried another business because they're
yeah,
chasing that euphoria. They're not chasing they don't have resilience. that comes after the euphoria, basically. So I think
Yep.
it's nice to feel it occasionally, but it's more hindrance than it is useful, I think, euphoria, basically.
Yeah. No, I'd say that, and I have, yeah, I've had experience of seeing those kind of people who, you see them on the circuit. They're just, they're almost like seminar junkies. They're at seminar for one trading system, and then 6 months later, saying, different seminar for a different trading system, different, and then, years later, it's moved on from trading. It's like, I don't know, it's like Amazon shops or, e-commerce or property or what have you. And it's just almost, they're almost like chasing a kind of a high from it, but they're actually not really making any progress, in terms of that. And you do see that in trading as well. It just even if you just narrow it down to trading, lots of people are basically chasing system after system. And every time they get a new system, is that feeling, isn't it? Whatever you would call it, dopamine or what have you. They're just it's just an experience of it that they think that, oh, this is it, correct. When in fact, actually, it's actually probably just the start of all the hard work, of actually being able to sort of sustain operating at a particular level and stuff. So, here in terms of euphoria, I'll share a story from a guy I worked with years ago, over 10, probably maybe 15 years ago, maybe might be 15 years ago. So, yeah, he came to me to work with me, and he'd had a £10,000 account. Okay, he started with a £10,000 account, and he was just literally trading a breakout strategy on the S&P, which a mate of his who worked for Goldman's had given him. Okay, and it was just literally a breakout, and he wasn't managing risk. He was just going as big as he possibly could. And then I would see him once a week, and every couple of weeks he'd come, all right, and he'd taken his account from 10,000, then to 20,000, then to 30,000 and stuff. But the thing is, he couldn't. He knew what he was doing. In terms of he knew what he just basically traded a breakout of a range. Okay, on the S&P. That was it. That was literally it. Okay, got a few points and basically closed it, but was doing it at huge size. Okay, well, over leveraging it in terms of the account he had and what he was doing. And I was constantly hammering about, there was no risk management in place here. He needed to basically get a plan down in place. You need to manage risk. Okay, you need to honor the capital in the markets and stuff. And of course, he was invariably getting less and less interested. He was just like, well, why do I need to do any of this? Look at my P&L. My P&L is just going up and up and up and up. And he, over like a couple of months period, he took his account from about £10,000 up to £120,000. So fair play to him. But I was still kind of hammering on at him as there's no risk management here. This will end horribly. You need to get a grip of this and stuff, and and get a plan in place. And he was like, no, Paul, I don't need to do any of that. Look at this, look at that. I'm just basically, my P&L is going up. I've gone from 10 grand to 120 grand and stuff. I know what I'm doing. Who are you? So which one? I said, well, clearly there was no point in us working together because you're in a euphoric state. You've completely lost perspective. You're just basically you're doing your own thing. You're not listening to me. You're not taking any of my advice. We're both wasting our time. And so I ended the kind of coaching contract. Just basically, we're no good, and wished him well, and off he went. It was about a week later. Kind of like I think it was kind of like a Tuesday morning and stuff, and I saw I had missed calls from him, and I saw that I had that basically his voicemails. Okay, and I was busy that day. I was working, I was trading, I was coaching and stuff, and what have you. He's not my client and what have you. But as the day went on, I was getting more and more calls from him, and the voicemails were becoming more and more kind of desperate. First thing in the morning, it's like, hey, Paul is, I'm going to call him Jim. All right, Paul is Jim. Can you give us a call and stuff? I need to have a talk to you. I was like, all right, well, fair enough. He's not a client of mine. I'm busy. I'll call him at the end of the day. But then as the day went on and stuff, it was like, Paul, I really need you to call. Paul, it's really important. It's really important. And then it would go on. And by the end of the day, it was like, Paul, will you please call me? I need you and stuff. It was like really. desperate and stuff. And actually, what happened is I was like, I know what's gone on here. I know what's gone on here. I know what's happening. I know what he's going to tell me. And actually, I called him. I think back on the Wednesday evening, by which point he was in a puddle, literally and figuratively. So his trade had blown up. He'd basically been, increasing his position size every week he won. He'd increased his position size, increased his position size, increased his position size, and to the extent that I won't name them, but a large broker took him to Ascot, and had him sit with like Harry Redknapp. Harry Redknapp looked after him at the horse racing for the day and stuff and what have you. And he said all those broker people were wanting to understand how he traded and what have you. And he basically, he'd taken his account from 10 grand to 120 grand, and then in one day he lost 65 grand, bosh, and was down to 55 grand. The next day he lost 25 grand trying to get back the 65 grand he'd lost the previous day, and he was in a complete mess, and had effectively, that had gone terribly wrong as well. So effectively in 2 days he'd lost 90 grand of his trading account. So his trading account gone from 10 grand up to 120 grand, back to 30 grand, okay, or down to 30 grand. He'd literally given back 90 grand in 2 days, okay. And so he had literally gone euphoric, okay, Icarus, for one of a way, flown a bit too close to the sun, and had a real terrible collapse and stuff and what have you. And he was in an absolute shocking place. He was absolutely destroyed mentally, emotionally, and stuff and what have you. And you get usually, I wish I'd listened to you. I wish But anyway, too little, too late. Now the postscript of this, to be fair to him, he did actually do what I told him, which was just take a couple of months off trading. Don't try and chase it to get your money back. Loss aversion bias, because you're mentally you're shot, you're lost. Okay, you need to take a bit of time and a break. To be fair to him, he basically, and this was part of his luck. He took 2 months off. And then the 30 grand that he still had in his account, he used that to basically spend the next year traveling around the world, going to see and speak and spend time with some of the big trading coaches. So he went and spent spent a day or two with like Mark Douglas, other big guys, Van Tharp, around the world. He spent a year doing that, and basically, and then came back and then back to trading, and then actually became quite a solid trader. So he was lucky that he basically had he had that, let's say, that 30 grand in his account. Even though he'd had a big drop, he still had 30 grand in his account, and he reinvested that in basically in getting himself into a better place as a trader. Not everybody is so fortunate and stuff when they experience that. But even today, I wish it was years ago. I wish I'd been able to keep those voicemails, because they would be a fantastic cautionary tale for people to listen to hear, when it all goes horribly wrong, where euphoria is taking you far too high, and you're having a crash and collapse on the other side of it. It was it was quite a couple of days, even more so for him. But euphoria catches you in the end.
No, it does actually, but it's a thing I think with gamblers as well, because a lot of people are just gamblers, go into trading, and they are just chasing that euphoria. That's what they're basically at, and it's a really it's such a when you don't have that addiction, really, because one of the things I think with traders who win and survive, they're actually quite boring. A lot of the time, I'm a boring person in trading. I do my same stuff every day at the same size in the same way. It's predictable and whatever. Like, because I remember having a guy one time who I've had two fellas actually. One blew up 50% of his account, €20,000 account, half it went. And what ends up happening is that they get into a spiral, and then they can't think.
Yeah.
It's like, because you're flooded with these emotions, and then if you don't have that sort of risk control put into your system, like 3 losses or whatever it is. I can only lose $1,000. Like if you have $100,000 plus account, you could lose probably $2,000 a day safely, and stop it. And then it's it's just people trading, chasing highs. And it's because, I mean, people take cocaine for euphoria. Apparently, I've never taken it in my life. So
Really.
they're chasing those feelings through drugs. Too much euphoria is a symptom of many mental illnesses. So if you have a big symptom of a mental illness and you're trying to do something that takes all of your mental agility, you're not going to do it that well. And that's the same, it's the same thing. Like when things start to go wrong, if you don't stop, they'll spiral on you. It's a I think for some people as well, I think some people feel euphoria as stress because there isn't, they get so excited, it's actually really stressful. And the other thing with euphoria is that it soaks up a lot of energy.
Mhm.
So, like I had a day recently, actually, because I've been experiencing a certain amount of euphoria, I guess, recently enough in the last few weeks, because as I was saying, I was changing the way I was trading, and it was going better than I expected. And I was able to do things that I had been struggling with over the years. So I was feeling very happy and euphoric. And one of the days I got 75% of my best day in terms of points. And it absolutely locked me up because I could not trade for the rest of the day. I just sat there in front of the screen and did nothing because I couldn't concentrate. I was feeling a certain amount of stress because the problem is that now you've achieved this huge thing in your 75% day, 75% of your best day ever. If I give that back, I'm going to have a low. Even if I give half of that back, which would still make it like a really good day, I'm going to experience a big feeling of failure, really. So I tend to try. So I avoided it, and I avoided it by simply stopping. I had made more than I would normally make, significantly more than I'd normally make. I had made it because I had changed what I was doing, which means that I had become smarter. I'd become a better trader. And there was no point in then taking that euphoria, doing something stupid with that euphoria, going in feeling loads of confidence, and then doing something wrong, and then facing the mental drawdown, the sort of, oh, I feel so bad about myself. I had a really bad day or whatever. And one of the other things I think about that as well is that more than what euphoria, what you really need to do is just learn to enjoy what you're doing, to a certain extent, which doesn't include necessarily euphoria. And you need to learn to take those, smaller wins and all that kind of stuff, and the changes you see rather than, hitting it out of the park and doing something that's going to make you euphoric. You just feel happy. I feel smug a lot of the time. That's my main emotion in trading. I'm like, yeah,
Really well.
look at me, because it's because you have done something remarkable. Like, I mean, if you are a pro intraday trader, there's very, very few pro intraday traders. So you have done something remarkable. So a lot of the time I just feel generally smug about myself. That's sort of close mostly to euphoria.
Had a good day. Yeah, you do smug very well. You do.
I really quite like it.
But that is true, and that links into a case of in hubris in terms of if you have had a good day, a good day that is an outlier in terms of compared to your normal day. Your normal good day. I don't know. Let's say if your normal good day is is a 2-hour win because you've got one trade to it, and that's it. And for whatever reason, the stars align and you have a day where you finished 8R up or something. There's something that is outside of your normal. I always basically tell people, well, actually take the next day off. All right, because what will happen is either your brain will switch and you'll think, oh, this is now my standard. 8R days are now my standard. Okay. And it's not. You just had a really, really good day, okay. And actually, you don't want to fall into that. Or B, which is a little bit like what you were talking about, is that you lose the perspective of trading the market. You start trading your equity curve. You start trading the P&L of your account because you've had a good day. You don't want to give it back, right? You don't want to give it back, and so your trading decisions get skewed because you're not trading what the market's communicating to you. You are trading the fact that I've just had, I don't know, I've just had an 8-hour day and I'm not giving that back and stuff and what have you. And so you either play so defensively it's stupid, or because you've lost perspective, your trading decisions, you take sloppy trades because you're not as focused as you should be. So I always say, if you've had maybe it's a good day, maybe it's a good week, a good month, a good quarter, take a little bit of time off, okay, just to reflect on it and just to basically to recenter yourself, okay, just to put yourself back and ground yourself voluntarily, all right, rather than letting the market do it to you by giving you a slap in the chops and stuff, because you are right, is that people that have success, they have euphoria, and that high, let's call it like kind of high watermark in their equity curve. So many times I've seen it where basically people will just they're having achieved the high watermark, then they have the biggest drawdown because they give it back. And an interesting point that as I'm talking about, so I'm running a course at the moment, PTP course, about helping support people do their funded challenges, and part of the things looking at some of the data that comes out of the funding firms themselves about what good and bad traders look like. And the data we were working off, from one company, they were saying that literally everybody who had a bumper, big sized 5-figure payout had effectively blown their accounts within 3 to 4 weeks, having done that. Right, the first time they do it, they just do it. They have they do really, really well. They have a bumper payout. They become euphoric. They think, look, check me out. I am the next Paul Tudor Jones. I am the next George Soros. This is me. I've just had I've had a 35 grand payout. That is now my standard every month, and the trading changes are not for the better. And a lot of those funded firms were saying that basically within a month, most of those people who've had really, really big payouts, they're blowing that account. And so, it's part of the human condition. All right, part of the human condition, and actually dealing with that, both as a private trader, all right, is something that you just have to be aware of. Right, you have to be aware of, and you have to manage, don't you?
But then if you're doing that, you're trying to change your trading to to set it to a new standard like that. What you're doing reality is trading your emotions.
Yeah.
You're trading to, and that's a really big thing with traders, is that they're trading something that's not on the charts. They're trading how they feel. So it's like it's that same old story. That most newer traders make $1 and then they lose $2 because they cut their trade short because they want to feel good, and they hold their trades too long because they don't want to feel bad. And I think also as well, on top of that, is that completely modern society is set up, to create that sort of euphoria for you, because all these concepts like manifest your reality, and this whole believe in yourself thing, and all that kind of stuff. And the media as well tends to show these training montage, and the guy goes from being nothing to Captain America. It's so people have a belief in fast, easy results, I think, from the media. And I think that's sometimes can lead to you feeling euphoria, because you think you're undergoing the metamorphosis to become Captain America or whatever it is. And that's going to take really no time at all. And the sad truth of it is to be a professional trader, you need to have huge resilience. You need to because you're going to get kicked around. You're going to get kicked around every especially when you're on your own. If you're a retail trader, there's nobody there to help you. There's nobody there to mirror your emotions or to understand what you're talking about. So I don't know. I think it's one of the reasons why it went okay for me, was that I just had that real, you put one foot in front of the other until you get there, and that it was supposed to be hard. And I think that was a really big really big thing. I think your childhood as well can affect how you deal with euphoria. Because if you had a bad childhood, for instance, where standing out was not a good idea,
Mhm.
euphoria, if you feel euphoric, and euphoria is basically it's your change of status. It's you are getting better at something. You have won something, you have done something that you really wanted to do, and you feel euphoric about it. And that means that you're going to stand out. And for some people who've had, some sort of abusive childhood,
Yeah,
that feeling of euphoria can just generate enormous amounts of stress because now the spotlight's on them, and the spotlight being on you at one point of your life meant you like something that you didn't want to happen to you. So I think that's where that's a bit of an issue, like basically with some people, you
yeah.
know. Yeah.
The
And
it's interesting you talk about that, yeah, about just putting one foot in front of another, and that is definitely that's your trading journey. It's
mm,
I had experiences in my life, trying to run up hills, cycle up hills, march up hills with Bergens and rifles and stuff. It's always in the horizontal rain. It's always the way, you look at the top of the hill, and it never gets any closer when you're doing that, and you learn just literally to put your eyes just a yard or two in front of you, whether you're cycling, whether you're running, whether you're on a tab up a hill or something like that, and you just literally keep putting one foot in front of another, and don't get distracted by all the everything else going on. And that's a little bit like your trading journey. Everybody looks at that
mm,
that glittering sort of end game, all right, but actually a lot of it is you just focus on what's just in front of you, and you just deal with it, and you just focus on the trading session in front of you, and you
mm,
just trade it, and you lean into it, and you just do it, and then you review it, you learn, what did I do well that I'll take forward, what did I do bad which I need to cut out, what do I learn about stuff that I need to develop, that I need to work upon, and then your next day you just keep working and nudging your way about that and stuff. And yeah, and that kind of links into that tale about euphoria. Is when I see people who are euphoric, very often, they've left the ranch, they're off the ranch, they're off the path, they're off the glide. So, however, whatever kind of analogy or metaphor you particularly like to use, but that euphoria pulls them away from actually what is the true path, and it's the post euphoria crash. As traders, you might just say that's a bit of mean reversion. All right, that is just a bit of mean reversion action. And with the same thing with mean reversion is, you invariably you revert to the mean and go a little bit the other side of it, and that's a bit like a post euphoria crash for traders. So yeah,
yeah. It's
it's
also, oh yeah. So I was also just thinking as well, childhood things is that if your parents are telling you that you're special and wonderful and great all the time, you believe that you're special, wonderful, and great, and
yeah,
it can be something that'll take away from your resilience. Because if you're rewarded for being you, at the end of the day, and not what you do and not the effort that you put in, it's very easy then to fall into to lack resilience because if you don't have that resilience, you don't get the reward, and you're nothing without that. Like everything is all about effort, really. So it's the big thing. Even with my own son, it's I. Of course, you reward him for achievement, but it's the effort that's the real thing. It doesn't matter whether he wins or loses because if he continuously does good effort and gives good effort all the time, then eventually something will crack because you see these serial entrepreneurs or whatever they're doing, and it's just they might have to change from one business to another business, but then they give it the same effort and they keep on going. And I think that's a massive thing. Um,
yeah,
I was also thinking as well, euphoria stops your day just as quickly as a big loss. Because
mhm,
once you get to that euphoria, it just stops your day. So it's a waste of time, in some ways. When you're in a trading day, it's a waste of time. Um, I think also as well, when you're trading for a few years, it's just routine. There's nothing
Yeah.
much to be euphoric about. You can feel happy about some things, but there's not. I'll go on now after this and make 10 points or something, whatever it is. And there's nothing to be euphoric about. Like, I probably actually really won't change. I think I was really just thinking about taking the rest of the week off and going to switch on the workstation here shortly and just see how things are going. Yeah, basically. Oh, the other thing I was going to say about which I was thinking, euphoria is the result of risk.
Mhm.
It's a lot of the time it means you've taken too much risk and you've gotten away with it. And that's
Yeah.
what euphoria is coming from as well, is that you've put on, which is another thing which is rewarded by society at the moment. It's like, oh, we reward the risk takers. But the thing is that they look at all you watch a film and the message is the hero takes a risk and he wins the money and gets the girl. That's what the end reward of it is. But for everyone who takes that risk, if you look at intraday traders, like 99% of people who go into intraday trading will not be in it in 2 years' time. So there's 99 failures. So it's just the result of it's the result of doing something a lot of the time that you shouldn't have done, and then you got away with it. And what happens one of the things you learn in trading is that you cannot reward yourself for getting away with it. It's nice and it's better than losing, but it means, like, if I put on too much risk and I make a load of money, but it's outside of my setup, I feel bad because I've been stupid. I've done something, like you do an impulse trade, for instance. That's a common thing that might happen to me once in a while. So I put on an impulse trade, and the impulse trade might fly, and I might make loads of money, and it might be the best trade of the week. But I cannot take that to heart as I'm a good person. I have actually made a big mistake, and I put myself in jeopardy. So I can feel okay about a normal routine. Oh, it's the bottom of a range. Excuse me. It's given a signal, and it's gone up, and it's done all I want to do, and I can feel good about that because I've done my job. But some impulse trade that rewards me with 50 points is
Dangerous.
dangerous
Yeah.
because I could end up believing that it's me. That's
Yeah.
I saw something in the market, I saw it, and that's what's and
Yeah.
yeah, and you can't outguess the market. You can't continuously outguess the market. It just doesn't work. So
And I can sort of carry on from that and sort of evolve from that in terms of that also it plays an element in luck and your view of luck. So I think one of the things that has helped me, I think I spoke about this, I wrote about this a while back, is that I recognize when I have been lucky in trading. Okay. I don't rely on it. It's not part of my trading plan. Luck is not a strategy, but there are trades you put on and think, do you know what, that probably should have been a losing trade. But actually, for whatever reason, it's hit its target. And a lot of people would just get euphoric because they think, oh, yeah, I'm great. Whereas actually, I'm the opposite. I'm like, do you know what, Wallace, you were lucky there. You cannot rely on luck in this game. You need to work harder. So I kind of use it as not necessarily a stick to beat myself with, but it's a case of recognizing that, you weren't a great trader there, Paul. You were just lucky, and you cannot rely on luck in this game long term. You need to work harder, right? So I kind of almost like use it as a stick, to a guideline to stop me becoming complacent. All right, because complacency is something that I deal with, all humans deal with, and to keep away from it. So a good trading example, which is relevant based upon what we've seen going on this last weekend, would have been about 4 years ago. I had a good sized long position in gold, and it was doing nothing. It was entering, and it was just that hovering around the kind of the entry level, kind of up a couple of bits, down a bit, a couple of bits, and I was coming to a decision, because not only do I on kind of bigger, longer term positions, not only do I have a technical stop, but I'll also have a time stop, as in, if it hasn't done what I think it's going to do within a certain window, then I'm getting ready to cut. And I was getting ready to cut this gold position, and then Donald Trump, they did the drone attack, which basically they took out General Soleimani, the head of the Iranian Revolutionary Guard there, when they basically went and got him and stuff, and literally gold price just went absolutely went mad, flew higher, hit my target, took me out the trade and stuff. When I looked at that, I was lucky. I was just lucky. That trade, I was getting ready to cut it. Okay, it wasn't doing anything, and it was merely that event which induced volatility into the market that took my position from entry to target. Okay, and it was a good sized target. So it might have been easy to get euphoric and say, oh, aren't you lucky? Aren't you great? But actually, the reality is that I was just lucky. I was just I just had a position in the right place at the right time. That event happened. I had no idea that was going to happen. I was going to come or what was going on with it. In this case, it worked out well for me. You have to, and that's why I have to realize that you were just lucky in that trade, Paul. So you can't rely on luck. All right, you need to work harder at this game. It's always that kind of thing to, you need to be working a bit harder and a bit smarter to a bit more, just to basically to stop yourself from becoming complacent, start to believe your own, getting euphoric and starting to believe your own myth. You're becoming a legend in your own lunchtime. All right, that rarely ends well for anybody, does it?
Actually, time stops are great. I really think they are, because it's one of the things, especially in intraday trading, that you can use actually quite a lot, because you sit there and you're frustrated and you're making no money. And that basically means everybody else is frustrated and making no money.
Yeah.
And eventually then somebody has to do something. Somebody has to make a move, or else nobody's going to eat that day. So the time stop, basically you can sort of work out, you can sort of feel almost when it's time for the market to move. And also then when you're in a if the trend is in a pullback, particularly, it needs to move back up, or it's not a pullback. And if it's just struggling and sitting there and there isn't news or some reason for it coming out later on, you can start to see that it's over the time that it should be doing, it should be moving, and it's not. So you can either just tighten your actual stop or just get out of it. There's no shame in getting out of a trade if it's just not working, because the best trades, as it's often said, are the ones that move straight away and with trend. And bad trades don't do that. So yeah. The other thing I was thinking as well is that there's no great trader, there's no professional trader that isn't using this setup. So it's just doing the same thing again and again and again. Where a lot of the time, what I think the image that's given in society and the idea that a lot of people have is that it's guessing correctly, making the right decision plus risk. And then it comes back to guessing. And then once you're guessing correctly with loads of risk, you're back into euphoria territory, where it's a lot harder, I think, for like a really good professional trader. And an awful lot of the times when you're watching actually documentaries or anything like that, you're watching, the old open cry thing, and they're all like buy, buy, sell, sell. Or you watch a lot of YouTube price action traders or whatever else, and they're basically only really showing you their trigger chart, their low time frame chart. And that's what it looks like. It looks like they're making the right decision with a large amount of risk. It doesn't really come across a lot of the times that they're actually using a setup. And this is just the trigger part of the setup. This is just one little part of the setup. And I think that's one of the reasons why a lot of professional traders, you get past a lot of that euphoria stage, because it's the same thing. It's high in production work. At the end of the day, it's I could sit down and explain my setups, and I'll be using that same setup tomorrow and next week, and I use that setup as long as that setup grants me an edge, and it's just the same thing. The only difference is would be position size, where I might put up a bigger lot on it or whatever it is, but that's basically that. Yeah.
That's the gist of it. Well, there you go. I think that's probably it's probably a good time for us to sort of draw our session to a close in. So in terms of euphoria, to take away for people is that the definition of it is has to be clear. But as you said right at the start, the thing is that you will have moments of euphoria when when something clicks for you, that light bulb moment. And that's actually to be enjoyed. That's to be enjoyed. That's a demonstration that your application of your effort is rewarding you. But just don't think that is the that's it. You done. It's just a series of those light bulb moments as you work your way through. But also equally, you will experience euphoria. When if you're on good streaks, okay, or if you get very very lucky, you will start to maybe feel a bit euphoric. And that in itself is a warning sign. Okay, take time off if you can. All right, just tighten up on your risk management if you're starting to feel as if you are the next George Soros, etc. Because invariably that is you're experiencing euphoria, you're pulling away, and just before you get that mean reversion back into the crash element of it and stuff. So yeah, most of us as traders have to manage slumps. But it is also important to understand, when you get a little bit ahead of yourself, and you start to experience that euphoria. And so I think next week's session is all about how to scale up, all right, which is an interesting session for us, isn't it? Because there's, it's one of the things I get lots of conversation topics from in terms of people want to understand that. So I hope you'll join us for that. And as always, listen, subscribe, like, comment, okay, if this has helped you, if this has given you some insight, you've got your own thoughts, we always love to hear it. And undoubtedly we'll speak to you soon. All right, T, and thanks very much. Have yourself a good, hope that roof gets sorted.
Oh, I absolutely hope so. Yeah, because I can hear them mooching around upstairs, and I'm going to start hearing, you're going to be starting off now with a nail gun shortly coming through the, so it's, yeah. And plus I'm scared of heights, and this house is really high. And it just frightens me to see people on the roof.
Really? Oh, I didn't realize you were scared of heights and stuff.
It's terrible. My sister-in-law lives in Geneva, and everything in Geneva is up a bloody hill. And I remember going up to drive, going to one of these restaurants on those death roads, where there's just a little thing, and then there's a big huge, and I just put a blanket over my head. Wow. And then when I got to the restaurant, I got blind drunk, so I could come on again. Because that was the safest way to deal with my fear is
mechanism, I suppose. Yeah. There you go. Well, there you go. We live and learn every day is a new skill. I didn't know you were scared of heights. All right. Well, listen. Have yourself a good week, Ian, and I'll speak to you next week. All right. And thanks very much for everyone for joining us. Thanks very much. Cheers.
Bye bye.